Welcome to the Pipnotic Symposium on the 23rd of June 2017. Today we'll run through a couple of pairs and do a quick one, being Friday and all. My apologies for not getting this done earlier, but I'm pretty up to my eyeballs doing all sorts of different stuff. But we'll start with these pairs. We have a look at the Kiwi. You go to the weekly chart and see what's going on. You can see that price is racing north like it hasn't done for a long time, and we're reacting on this really nice demand just here. This is what we saw the reaction on. Then price reacted. Now we're racing up very, very quickly. We just tested this weekly child. We had a reaction, and now price started to drift lower. We're seeing some green candles recently here, continuing to move higher. So we might have another poke up into some fresh areas of supply and parents as well. And you can see up here we have one just up here. So we have a really nice one from here to here, like that. Let me make sure that the risk is correct. So we have this one up here. We'll move the stop just above. Let's have another. You can see we are actually reacting at this small continuation pattern just here. We're going to mark that one off just so we know where it is. So from here, just take that like that. This is where we reacted. The weekly supply, nice test. We have this one, which is at the this is a child test. So you want to make sure that the stop is going to be located above that somewhere. So give it a few pips, maybe 10 or 20 pips. Let's have a look. About 20, I got 27 pips above, 25 pips, which is fine. So I'm going to put this one on. We're going to see what happens. Let me remove some of these lines, like so. Good. And so, let me remove this. I need that one. I want to get rid of that one. Oh, that one. There we are. Okay, so we'll put this one on. 1070. We're going to be selling limit at 74.16. Stop at 75.10. I'll put a target. It's something we'll have a look at that in a second. Let that do its thing. Yeah, so that's what we're looking at. Price is also really moving higher, as you can see. So we're going to put that there. We're going to put the target, the timing, we'll put it here in this nice, fresh demand. Why is this demand? Because it took out all of this. When price left here, it went above all of this stuff here, which is probably a weekly or a monthly continuation pattern. You can see it just here. Nice weekly continuation. And then it's happened right here. Price went up, gap down, filled orders, and then moved up and through. So this is a pretty good area, and you can see that the origin of that move is this nice continuation pattern. So this is a really nice target, I think, for this trade. So we'll put that in, we'll leave it, and we'll see what happens. Good. Okay, what else we had? We have this. I just missed a pound entry. If we have a look here, let's do this from the beginning. You can see here that on the weekly chart, price is reacting at this weekly demand. Like that. What does that tell us? That tells you want to be careful selling, because prices, you can see we've had a pretty big rejection so far this week. And so selling now might not necessarily be a good idea. We have strong move higher. You can see how long it took for price to get back down to this area. So we're expecting another release to the upside that looks similar to this one here. So strong push, slow retracement, strong push higher, potentially up to this one here. I like this one here quite a lot. Looks like a pretty decent area. Bit upset I didn't get filled on that one, but you can see the the logic behind the madness there. I think that's a pretty nice trade. On the daily chart, it really jumps out, and you can see it very nicely and clearly. The price only came back to the high of this candle prior to the break here. And if we have a closer look, we can see why this was a nice area. We had this here, which is, oops, let me widen that a little. So it's tested once, twice, almost 3 times. On the 4th time, price cut through it. Which area managed to take it out? Well, it's this one just here. So this is the one we want. So this is where we target for our entry. So we'll remove this one. This is gone. And now this area of demand is in play, and it's already had a test. What would be really nice if price manages to move up. Let me zoom in and draw this. Remove this. It's a bit of a big one. Let me see. I know on this tool here, tools, recording toolbars, effects. Yes, draw. Good. Okay. So I'll draw. So I'm thinking that we probably have. You know what? Before we do anything, we're going to put the histogram on. Let me get rid of this. Come on. The histogram on, just to see if there's some divergence setting up, which there potentially could be. Not in this time frame. We go to the one smaller. Yeah, kind of not pretty. There it is. So we have price doing this. Make sure my trend lines are turned off so they don't ruin. We have that, and then we have this, which means that we have a pretty good likelihood that price comes back down to here somewhere. I'd really like price to move through this to kind of clear the road up to here. But we still have to wait for this to happen. So we won't do anything yet. We'll leave it on the chart like that. We missed the first one, but we now have this. Matter of fact, I'm going to move this chart over here. What's this one? I'm going to remove this. So now we have that. So pretty nice potential trade setting up. And here we are waiting for confirmation. We didn't just dive in like I wanted to do, but we waited for price to show us it was going to stop. It did that. And now we're having a rejection, and so now we want to wait for this currency strength divergence to play out. So we want price to kind of wriggle up a little bit higher, and then we could potentially target this here as an entry. So that looks a bit wrong. That's why 0.25%. So we have this like that. So that might work out pretty nice, and you can also see price raced up. Price came back to about the 26.40 area. So you don't want to be paying a price any more expensive than the 26.40. So this would be a really nice area to buy at just here. You could probably go to the hourly chart and even refine it if you wanted, and that would bring you down to here. The indicator pointed out nicely for us here. We'll leave it on the 4 hour and we'll see what happens. So we have that one, which is lovely. Okay, I just want to show a trade that I got on the euro yen. We had this really nice. I think they're enabled here. Let's go like this. So we had this really nice area here. We had a horizontal trend line break. You can see all of this test here. Price cut through it. We had no closes above this level. A lot of tries, and then price went down. So we kind of pulled the catapult back. We raced up, stuck just below the level, accumulated, and then we went north. And we had the trade right here. Beautiful trade. Where do you get out? At opposing supply, which is kind of up here. We'll put it like that. So somewhere like that. You could have also gone for the wicks, then you'd be out of the trade. If you didn't get out of the trade, you'd have to give back all of this. But you could do that because this is just a validation, verification that price is going to react. So this is a very clear example of a price imbalance here. So price moved up, it came down pretty quickly. So we left a price imbalance in the wake of this move, so we can expect price to return to that before it either continues back to rebalance this or to continue higher. So I took this trade. I only got a 1-to-1 on this. I got out really like around here because I had a meeting and I couldn't babysit it, and so I just took it off. So around here, just below the big figure. But a friend of mine managed to ride it up all the way to the 34 area, which is roughly where it is now. It's at 35. So that turned out to be a pretty nice trade for him. And if we look a little bit higher, we have a couple of other areas that are interesting. We have two areas that line up really nicely in the same price level. So if we mark the high off there, zoom out, and we see what are they reacting on. So we've got to go left, got to look what it is, and they're reacting on this here. Let me remove this. We'll draw this in like so, give it a bit of room for the stop, and then you can see that they're reacting on this. So I mean, this is the first, second, this will be the third time back, but we had some pretty good reactions there, so you could give it a go. Alternatively, you could wait for price to come up here, which is still untested, which is a really nice one as well. So let's analyze the accumulation here and find out where our entry should go. So okay, so price left here. So we go to the candle before and we say, are you an accumulation candle? Yes, I am. Good. Is a range of the body within the range? Is the body of this candle within range of the previous? No, it is not. So this candle and this candle are not related. We have this one and this one, and these two are related because the body of this candle is in the range of the previous, which is not the case here. So these two make up the accumulation at the top of this candle. So what we could do is we could have an entry to buy looking something like this. So the high of the candle to the left, which is this accumulation, so this is like the parent, this is the child, and then we could leave it like that. And then if we look left here, we can see what's going on. And I was simply reacting at some resistance there, so that's fine. We also have a trend line break here, from here to here. Looks like we've already seen a reaction at this accumulation here. Yeah, I mean, right on the money. Okay, sorry about that. That was logistics of picking up children. Okay, so you can see we had an upward sloping trend line. This has been violated, so we had the market structure failed. What caused the fail of this market structure? Well, this up here. So we go to the weekly chart and have a look. Let's have a look. You can see it pretty clearly here. You know what? We're going to mark this off. So I mean, this is where it went a test on the release. Price has not been back there yet. So this would be, it could, you know, let me remove this. Let me put this on the right. Oh, let me remove all these. We're going to take this. Whoa, come on. We're going to take this weekly trade. Okay, so I want to take that one there, because that could be a pretty nice longer trade to sit on for a while. We'll take these off, these small ones. We're not interested in those. Only on the way down. Okay, so we're going to put that one on there. The 126, you know, we're going to put a bit of a gap. Okay. 0.69. $126.30. 128.67. And we'll leave it like at that for the time being, like a 1-to-1-ish, and we'll see what happens. Yeah, we also have this one up here, which I like very much. But so this looks pretty good. I think this looks pretty interesting. So we'll keep that in there, and we'll see how we get on if we don't get a reaction. And we have a lot of accumulation just below this area, and you can see how price is it's not showing a lot of strength. There's a lot of agreement in supply and demand, which is supports our trade. So if we throw the currency strength histogram on, see what's going on, maybe on the smaller time frames. Yeah, with this momentum is really slowing down. Anyway, so we could manage to wriggle up there, poke into that, and then have a release down and maybe return back to the origin of this gap here, or potentially down to around this area here. Then that would be pretty nice. But we'll wait and see. We'll leave that in there and see what happens. Okay, I mean the yen. What do we have in the yen? We have this area that I've been waiting for a long time. Price still hasn't gotten there, and it's this one here. You can see that we had this high. First of all, we had this. It's been taken out by this. This was the one that kind of accumulated inside it and then cut through it. And so if you look lower, I mean, price has already been back to, on the daily, back to the low of this candle here. So we move this down to here, like that. So I like this area very much. At the 106.80, it's pretty nice looking, I think. Move the stop down a little bit. Let's have a look at it on another chart. See what it looks like here. It's kind of a strange thing here that I'm showing, but I'm doing it because I want to kind of drive these points home, which are really interesting. So first of all, what price level are we? We're at the 106.80. Okay, so the 106.80. Let's find that. There it is. Okay, so you can see that it is the close of this week and the open of this week. So the transition between these 2 weeks is located in this area. I like that. I like that a lot. Go to the 4-hour chart and we'll see what else is there. You can see that we have, you could see that, is that the right one? Yes. Okay, so we zoom in and you can see that inside here, you can see that we have in price kind of rallied, accumulated. You can see we have an accumulation candle. If you zoom in very far, you can see it. You can see this daily accumulation candle, and then price cut up and moved higher. And then we have this green candle here, which is a price imbalance candle. So this is a price imbalance, which means that relative to what's happened before this candle, this is showing a lot of strength and follow through, which we're seeing very nicely here. So we could also, yeah, we'll leave it at that. So I mean, I like that very much, and so we could certainly mark that off and take that. So I just wanted to show that on here because I'm finding a lot that when price rallies like this towards the end of a day or a week or a month, and it accumulates towards the end of that period, and then the beginning of the next period it pops higher. When it comes back to test it, it's often a really interesting place to consider a trade, simply because of the fact that it happened at the close of this month. And these previous period closes are also very useful, especially when they're overlapping with these really nice areas of demand. And you can see this nice area on demand on the daily. We'll go back here so you can see it clearer. And it's actually, I mean, the high of it is at the 106.80. Which actually brings it to around here, just like that. We'll go back here just for more clarity. So this is where it is. So we can move this, we'll move the low a few pips below. We'll put this one on, make sure we have the right settings. Okay, we'll put those on there. 11.3. 106.80, pretty far away, and 105.81. and we'll do the target in a minute. So we don't know where the target's going to go because we can't see price yet in relation to the approach up to this area. But you can see we have a weekly area here. So once this is taken out, we're going to target the supply that took out this weekly demand as our target on our long for here. So we'll leave it like that for the time being. We'll click this one. Then we'll look at the CAD. And the CAD is pretty cool because we have market structure which has failed. We had this upward sloping, we had the trend line or the channel, whatever you like. Matter of fact, we can probably move it like that. That flushes nicely with the highs. And then, so we had a high, low, high, low, high. Nice and flush, nice and flush. We accumulated just below the area and we cut through and we took out this demand. So the area of supply responsible for causing market structure to fail is this one here. So the 134.43. If you go to the daily chart and we have a look, so it's pretty choppy, pretty traded. But we do have that in there nonetheless. So I'm going to move this up to I'll move up to the bottom. Let's move up like that. Let's see if we get in there. I will let it do its thing, but that's what I'm currently looking at there. It's like a nice weekly pattern. I like that. But you could, of course, choose this candle here because this is the highest, so the more conservative. But you can see the low of this accumulation is the lowest of the lows in that area. And so you find this one here, you go, is this a price imbalance? Yes. Where is parity? Parity is back to the accumulation. Go left. Is the range of this body within the range of the previous? Yes. Is this body within the range of the previous? Yes. No. So this is the area that we want to sell at. So the high, like so, and the low is the lowest body. You look like that. And maybe put it on a few pips below the low, which we've done just here. So we'll leave that in there and we'll see what happens for targets. And maybe we could look for opposing areas of demand, maybe down in here. We could go to the 4 hour, look for that. You can see that we have something 05. We have something kind of down in here. Yeah, I targeted kind of this, but we don't know. We have to wait and see what happens because there's a lot of stuff probably going to happen within this move higher up into this area. We'll have to wait and see. But for the time being, on the weekly chart, it looks pretty cool. So we'll just leave it at that. But oil has been drifting lower. And oil going lower means the dollar CAD going higher, because weak oil means weak CAD, which means strong dollar CAD. So anyway, that's what we'll look at there. Let's have a look. We've looked at this one. We have the Kiwi. We have a look here. You can see this is just oil, and you can see, oh, that's terrible. The price feed. Let me zoom in there. But you can see that we had a test of this area, another test. Price sold off. We accumulated just in the area, and now we cut through it. So we have a pretty nice area to consider here. And I don't trade oil, but you would just trade this in relation to what the CAD chart is doing. So like here. So when this reaches supply here, and it continues down, then this would be the same as the American dollar moving higher. But ideally, we want the opposite to happen. We want this to continue going higher. So we want price to come up and go down, which will bring the dollar CAD up to this, and then we want to find support on this somewhere down in here, which we have around, I don't know, we'll just mark something off like around here somewhere. So price could maybe wriggle down there, kind of to the low of this. So we still got a bit of room. And once price comes down here and starts to move up, this will bring the American dollar, Canadian dollar down. So let's hope that these overlap at roughly the same time. If they don't, no biggie, but we'll just keep our eye on it. Yeah, I think that's all I'll cover for today. Keep it nice and short. I hope you managed to update the indicator, because we're running the 1.5.13, which is the latest. Let me confirm that. Yeah, 1.5.13, and this one is is much better at identifying price imbalances. I changed the name from extended range to prices imbalance because it's an extended range bar, but it's actually a price imbalance because extended range is relative, but a price imbalance is the real name for it. So I've changed that. I've also done a lot of performance updates, which I hope you're all noticing. I apologize for the previous version, which was a bit of a dog, but things have changed, and so I'm hoping that this will be running much better. I seem to be having a lot more pleasure using it. I'm still using it on my 36 charts, and it's running with absolutely no problem whatsoever. And a quick update regarding the next version of the indicator, so 2.0, which is going to be based on the TradingView charts. It's coming along well. Next week I have a meeting with the developers, and we're going to discuss the algorithms for identifying supply demand and get all that sorted so that we can start developing that, maybe actually start developing that from the end of next week, and that'll run through probably late July, and then we should be done with that, and then ready to start onboarding some beta testers. But when that's ready, I'll put it out there, and then if anyone's interested in trying that or being a beta tester, that'd be really cool. You can give it a shot. And I'm going to also include these. Where are they? These in the new version. These multi-candles, because they provide such an incredible amount of information. It's incredible. You can see here how we had this week. It ended, a green candle. The new one started. We moved above this, and we had daily accumulation at the level. This is where price reacted, and so you'll see this a lot. And I like this so much that I want it to be implemented into the TradingView chart version of the Pipnotic software. It's going to be called Compass, because I think a compass is a great tool for helping you find your way, and it's my impression that the people who are using a lot of the Pipnotic software have managed to find their way in the trading world, because the retail FX is a bit of a messy market, and a lot of people are saying a lot of clever things and saying that this is good and that's good. But I think that the selection of tools that we base our material on, supply and demand and currency strength, is really fundamental for how price moves. We're focusing a lot on liquidity and the mechanics of the retail currency market, or the currency market as a whole. And I think this is a really well integrated and holistic approach to trading these markets, because it's all about liquidity, supply and demand, and economic growth for the individual countries, and this is where currency strength comes into play. So Compass, I think it's a pretty cool name. So it's going to be called compass.pipnotic.com. It's not there yet, but it will be, and I just really look forward to having that done so that we can start to move people over to the new platform. And if you want to continue using the older version, the current version of the software, you can, and maybe in a year's time I'll start to switch it off, so I don't have to maintain two code bases. But we'll see. For the time being, everything's open. We still have a month and a half until the software is finished, and so there's still a bit of time to cover. Anyway, I'll leave it at that. I wish you all a fabulous weekend. If you have any questions, please send them in. If you have anything you want me to cover next week, please let me know, and I'll be thrilled to do so. And if any of you fancy coming on and showing some of your material, I know there are a couple of guys there that are doing so well that it's dizzying, and you know who you are, and I know you're listening, and I've asked you if you would come on and talk about what you're doing, and this is just an encouraging word to ask you to come on. I'd really like you to come on and tell the other members what you're doing, because you're doing really incredible things, and so this is really something that I'd like for you to share with the other traders. We can also do it anonymously. I can also present your material if you like on your behalf, but it's much better if it's someone else that says it instead of me always here rambling. But anyway, just food for thought. You can chew on that over the weekend, and that's it. I wish you all a lovely weekend, and I look forward to seeing you all next week. Thanks very much.